Hey, good morning, traders. I want to talk to you today about a potential trade in IWM. As you can see, I went out to March the 18th, which is 45 days away. And this trade is kind of it's an iron condor, but it's got wide strikes. It's got $20 wide strikes. So you might ask the question, why a $20 wide iron condor? Well, this trade kind of sets up the same thing as a strangle. $20 wide strikes. You're buying the wings for a very low price. Um, many options traders do not have the approval option level high enough in order to sell just a right out strangle. So this is one way you can somewhat simulate one. Um, and get some better returns than just selling, say, a $5 wide or something like that. So, for example, we'll look here. I'm selling short the 220 call, and if you bump this down to say 225, and do the same thing on the put side by selling the 180, and if you bump it up here and buy, say, the 175, well, your credit received is going to go down to $1.14 versus the 20 at over $2. See what do we have here. Let's go back and put the 240 on, and go back and put the 160 on. And that raises your credit to $2.71. So it's a lot more credit now, a lot more risk as well. But if you open up the Greeks here, you can see that on day one this has a theta of, we'll call this $6.25. So it has pretty high theta. You know, if it stays right around here, around the $200 range, you're going to start collecting $6.25 a day in theta. And as you can see, as you turn up the time, it goes up daily. So there's the Wednesday, Thursday, Friday. Friday, you're up to $6.50. Saturday, Sunday, and the following Monday, you're up to almost $6.75. So if you held this through the weekend and into Monday, and again, if it stayed around 200, which nobody believes it's going to just sit here and not move, but it would make you a return of less than a week of about almost $35. So that's a trade I'm looking at putting on. It does require about $1,800 of buying capital due to the fact of $20 wings, and you're collecting 271. But your break-even points here are all the way up to 222, which is 22 points higher. That would give you basically a 10% move in 45 days in order to make you start losing money. That's pretty wide. I'm not going to say it can't move 10% in a month, but it's going to take a pretty good move. And if it started moving, I mean, if it say moved up 5 or 6 or 7%, you can always roll the untested side, the put side, and you roll it up for more credit. Or if it goes the other way, you can roll the call side down for more credit. You can make some adjustments on it. So, and you can see these two marks right here and here are one standard deviation. So your profit tent still holds a maximum profit on it one standard deviation away. Now, would I hold this thing all the way for 45 days looking to collect $271? Probably not. If I, was able to get out of this thing, say, and take, $100, I'd probably take and run to the bank. So, good luck to you.